Um, Hello, everyone. Welcome to another episode of the Alt Investor podcast that equips you with the right knowledge and provide you a way of alternative thinking before you make your decisions with respect to alternative investments. My name is Yashunta, and I'll be your host today. And today, I am delighted to welcome Nikhil Aggarwal, who maybe doesn't need an introduction given his popularity in the alternative investment community. But for those who don't know, he's the founder and CEO of Grip Invest, a SEBI regulated OBPP platform. One of the key achievements for which I know Nikhil is enabling SDI, or known as securitized debt instruments, as an investment option for retail investors for as low as 75,000 rupees. Uh, in this episode, we'll discuss about Nikhil's journey so far, more about Grip Invest and its future plans, and also his thoughts on the OBPP regulation. Nikhil, a very warm welcome to the show, and thank you so much for taking the time to record this. How are you doing today?
I'm doing well, Yash. Thank you so much for having me. I must credit you for becoming the voice for alternative investors and answering some of the key questions that are out there. Like we've been chatting, I think there is a lot of interest, but there is some amount of opaqueness, lack of information, lack of understanding about these investment options,
Yeah.
and with a large number of players coming into this space, I think it's important to clear the air as much as possible so that people make smarter decisions. So thank you for being that voice and for your platform to become that voice and for having me on it.
No, no, thank you, Nikhil. I mean, people like you who come to the platform actually make it more famous and reach more people. So again, I mean, it's a two-way street. So thank you so much. So so Nikhil, let's get into it. Now, I mean, you have had quite a journey, and Grip is, kind of one of the biggest OBPP platforms out there right now in terms of the investments you have enabled, the AUM size. So what's your journey been like, let's say, from the time you graduated from college, uh, and till, starting Grip and where you are today?
Sure. I think the first word that comes to mind is that it was a little unpredictable. I don't
Okay.
When I graduated from college, I did not think that I would have had the journey map that I did career-wise, or that
Okay.
I would be doing this. Um, I graduated out of economics in Delhi University, did completed my MBA from FMS, and like most B school students, started their job in banking, right? I started my career with HSBC. This was in 2009, and I was part of a small team that was rebuilding home loan mortgages
Hmm.
for HSBC Bank. I think sitting in that desk in HSBC, I don't think I envisaged ever running buses at Chalo or working for
Hmm.
the World Bank or enabling alternative investments. But I think that's the beauty of being in India today, being in a very vibrant startup ecosystem, being in a place where you can take those opportunities come to you and you have the ability to take them. Um, you know, my career has now spanned about 14 years. HSBC, Morgan Stanley, and then my first startup, Chalo, sometime at the World Bank as a consultant for transportation electric vehicles, and then Grip. But I think what sort of remains memorable is the diversity of experiences that this threw up. Right?
Hmm.
Um, Between working with clients who were people like Sachin Bansal,
Hmm.
the Snapdeal founders, working with them when they were very early in the business on helping them fundraise. And this was when I was at Morgan Stanley, to going and installing GPSs in buses and trying to
Hmm.
convince bus operators, to speaking to government officials and trying to effect public policy that could help fasten electric vehicles. I've been incredibly fortunate
Hmm.
to have had these chances, right? To have been in a room with incredibly smart people who were doing very, very innovative things, and to just listen in or contribute or be part of that conversation, which I would say, contributed to me being having a more wholesome journey as a professional, right?
Hmm.
And somewhere, whatever they said, whatever they were doing, part of that stuck and enabled and shaped my decision making, my entrepreneurship, or me as an entrepreneur. So that to me is just a very fortunate experience. I wouldn't have it any other way. I
Mm-hmm.
wouldn't have the unpredictability any other way, and that's really helped me think about grip as a concept, but also think about what is the culture we build at grip. How do we operate at grip? Who are the people I'm excited to work with at grip? And that's sort of been the last 14 years of my career.
Mm-hmm. So, pretty interesting. You said, diverse kind of experiences help you a lot in your day-to-day life. So I'm also assuming, in your hiring methodology right now at Grip, you might be hiring people, from very, very diverse backgrounds just so they can also bring new perspectives and new ideas onto the table, right? I mean, uh,
Yeah, I would say that I think the diversity comes in various shapes and forms. Um,
mhm,
People may come from a similar educational background. Obviously, different teams require different types of skill sets.
mhm,
But I do think that having diversity of people in the way they think about things, okay?
mhm,
Like if you're in a room and we're making a decision about grip, something strategic at grip, having someone who can be super conservative and
mhm,
super aggressive, having someone who has seen um, the legal implications more closely versus someone who has seen growth hacking at a 0 to 1 startup more closely.
mhm,
I think all of these, the spectrum of diversity, makes a huge difference to making those decisions, because
mhm,
every time we have a question to ask, we have different opinions coming from people within the team,
mhm,
and it makes my job very easy because I can get quickly educated on what should we or should we not do,
mhm,
what are the likely risks that we have to take as a business, and then take a decision for what we believe is the best possible way forward, right? So I
mhm,
think it's important to have diverse views in the room.
mhm,
The time we stop having that and people start listening to their own Kool-Aid, right? And that's the only thing they're drinking. I think that's the chance when we have when it becomes really risky.
mhm,
Um, if I look at Grip's journey, I think we've been shaped a lot by such diverse set of employees. We've
mhm,
taken some calls around along our journey because we were able to encourage those views to come out and say, hey, there's a better way to do this,
mhm,
and then put ourselves in that direction.
mhm. Fair enough. So, I mean, can you explain in, let's say, two or three lines as to what is Grip Invest? And, then the follow-up question is, what are you trying to achieve personally and professionally with Grip Invest?
Sure. So for everyone's benefit, Grip is an investment platform that allows you to make investments in fixed income opportunities. Till a few years ago, fixed income simply meant bank FD, right? Putting your money
Hmm.
in the bank and earning 5, 6, 7% in it. We really wanted to challenge that at Grip and say that fixed deposit, which is the comfort of receiving returns monthly, the predictability of returns, can also be combined with much more attractive returns.
Hmm.
And at Grip, we started offering and continue to offer opportunities that generate 15, 16% returns, along with all those same features of fixed deposits, or all those features of fixed income, not fixed deposit, but fixed income. And that's what Grip is about. We've been operating for 3 years. We're a SEBI regulated platform. And I think the kind of opportunities we offer on the website are unique to be able to build that more diversified portfolio. So that's what
Mhm.
Grip is. I think to answer the second part of your question, I think the personal objective, um, and I think most entrepreneurs would say the same thing, is to be able to establish something which outlasts you, right?
Hmm.
You're not setting this up as a fly-by-night operator. You're not setting this up with a short-term goal. But when you set up a company, you set up, you take any initiative, you basically want to see it grow into an institution which can continue to operate without your existence, without you as a
Mhm.
person existence. And I think that's really that's the biggest personal driver at Grip for me, is how do I establish that And so that 100 years later, there is still grip or a version of grip which is offering great services for investors. And I could be sitting somewhere on the beach, or I
Hmm.
may not be there, and the companies continues to exist. um, Professionally, we're obviously, as a mandate, our I'd like to see Indian investors make more money.
Okay.
I have this belief, and I've seen it in my career. A lot of us generate majority of our wealth or majority of our savings actually through salary income. Yeah,
Hmm.
we work very hard for our salaries. We work for a very long period of time, and that salary post tax adds up to our savings.
Hmm.
Some of us have ended up making good investment opportunities or good bets that have multiplied the money, but that's really far in between. Most people are only able to grow their wealth in a linear manner.
Hmm.
What I'd like to see is how we can impact investors' portfolio and help them grow capital faster. The
Hmm.
simple thing of allocating some of your fixed deposits into alternatives, which can give 2x a return, right? I think those are things that we would like to solve and see how a broader set of Indians can generate more significant wealth.
Hmm. Very interesting on the personal front. I think the term that you may be looking for is legacy, right? You want to create your legacy as well, something that you made a difference, and uh, Grip was one of the first companies to do this, brought this, revolutionized the way retail investors are investing, and that's Nikhil Aggarwal's legacy. Uh, and
Yeah, I'm sure you can put it that way. I think the you can have legacy for a lot of reasons. You can even have a short term, like you can have a legacy for doing something very short run, right?
Mhm.
No, Grip, for example, became the first platform to list the SDA on the stock exchange.
Hmm.
It'll never change, right? For the next
Hmm. Exactly. Yeah.
million years, it's first. It cannot change.
Yeah.
But and that could be legacy. But I think the way I think about it is more continuity. How do
Hmm.
you establish for Coca-Cola? Does any of us know who's founded Coca-Cola? We don't, right? No one cares. But as an institution, it exists, prospers, and
Hmm.
continues to exist. How do you do the same thing for something that you have started?
Hmm. Makes sense. Makes sense, actually. Uh, so now Nikhil, Grip has been there for last 3 years, and you weren't an OBPP platform always, right? So actually, first let's cover what's an OBPP platform for our viewers.
Yeah. Um, so when we started 3 years ago, there was no regulation that
Okay.
particularly covered the business of offering such investment opportunities to retail investors.
Hmm.
And hence, us and a bunch of other platforms who started were not regulated because the regulation didn't exist. Yeah. Um, Before I go into what OBPP is, I think it's more important to highlight the framework and thinking that SEBI actually had behind it, and that it seems to continue to have. The chairwoman, in a speech last year at the Global FinTech Conference, was very candid and you know incredible respect for what she said and how she's operated, was to say that regulators in this environment will always be slightly behind the curve.
Hmm.
Innovation will happen first, new products will be brought to the market by startups, and then the regulator will end up playing a little bit of a catch up.
Hmm.
And in that market, how should companies operate while they wait for regulations to come? Right?
Hmm.
And she spoke a few points that are relevant from an investor's point of view or from an investment platform's point of view. The first was that build transparency,
Hmm.
provide as much information for the investor. Second is create a possibility for the investor to get an early exit.
Okay.
And she laid out three, four other principles which were similar in nature, right? And she said, if you are building an investment platform today, you don't have the regulation, keep these principles in mind, and I can assure you when they come, you'll be fine, right?
Hmm.
I think the OBPP was the step that SEBI took to crystallize exactly this philosophy, right?
Mm-hmm.
To answer your question directly, OBPP stands for Online Bond Platform Providers.
Mm-hmm.
It basically says that if you are offering fixed income investments to retail investors,
Mm-hmm.
you must have this license. That's the first thing, right?
Okay.
The products you offer must be listed on a stock exchange.
Okay.
This will ensure that if a person wants to exit early, they have the ability to exit. Exactly
Mm-hmm.
what the chairwoman said. It then said that the product has to be rated, credit rated, okay? Because that will solve for transparency,
Mm-hmm.
okay? Exactly what the chairwoman said earlier. And then it said, hey, if you meet all these three criterias, SEBI as a regulator wants to deepen the markets, debt markets, and it will allow ticket size to be reduced
Mm-hmm.
to 1000 rupees or smaller for a public offer and 1 lakh rupees for a private offer. Yeah?
Okay.
Um, and then it finally said, we also want to make your payments more secure.
Mm-hmm.
So, as part of the OBPP, you must integrate with the stock exchange and offer all of these instruments through a direct integration with either the NSE or BSE or both. Okay?
Mm-hmm.
This is effectively the key tenets of the OBPP framework. Yeah.
And what is the
So,
integration called? Sorry, with the NSE
yeah,
and PS
the integration is called RFQ. It stands for
RFQ.
request for quote. In a very simple way, it tries to replicate the stock buying experience for a fixed income instrument.
Mm-hmm.
Right?
Got it.
And so effectively today you could go to an OBPP's platform, purchase a security. Yeah, it'll be credit rated, so you know the risks. It will be listed on the stock exchange, so you could sell it. And when you buy it, you will make a payment to the stock exchange, so your money is secure.
Mm-hmm.
It will get credited to your demat account.
Mm-hmm.
Okay.
On
So
T
you
plus
have
one.
on T+1 basis, right? So you also have proof of ownership.
Mm-hmm.
This really elevates the experience of buying alternative investments, fixed income alternative investments, from what existed earlier. And OBPP is a huge inflection point or a game changer in this industry.
Mm-hmm. And I've noticed, OBPP platforms generally have, let's say, 1 or 2% lower yields than regulate unregulated products out there. So, I mean, has the regulation really impacted the uptake of investments on your platform just because it's lower yielding product now as compared to other competitors? And you said, I'm sorry, you said that OBPP, any fixed income platform needs to have an OBPP license. We still see some of the, platforms which are in the unregulated space offer, let's say, unlisted corporate debt and unlisted commercial papers. How does that work then? I mean, are they operating in the right side of the law, or
Yeah.
I'm missing something?
Uh, yeah. So I I think there are different interpretations that people will take of the law.
Okay. Okay, got
I
it.
think, let me just tell you our interpretation of law. Um, is that, and again, to me, it's about philosophy, right?
Mhm.
And that's why I think what Madhi Buch said is so powerful. She said that if you're offering to retail investors, okay, you need to make sure that it is solving for transparency, security, and ability to exit. Okay,
Mhm.
if you're not solving for retail investors, no problem, right? Do whatever else
Mhm.
you want. But the retail investor is likely to be less aware, spend less time in evaluation, and
Mhm.
the loss of capital is likely to be more impactful to the retail investor.
Correct.
So, the higher threshold that you need to meet for offering them these products.
Mhm.
Hence, our interpretation of law is that if you are solving for retail investors, you need to be an OBPP, irrespective of whether you're offering corporate bonds, commercial paper, treasury, whatever you're offering, right?
Mhm.
Uh, and we would believe that SEBI would take very harsh action
Okay,
against platforms and investors who are not meeting that regulation.
got it.
Yeah,
So, knowing as we know of OBPP regulation right now, would you recommend any changes to the regulator in the
sure.
regulation itself?
Yeah, I actually think the regulation is great.
Okay.
But like every regulation, I think there are certain learnings that come along the way. Um, we've had some learnings which would require more clarification, and these some of them actually don't even relate to OBPP. For example, NRIs are not allowed to invest in corporate bonds and SDIs. Yeah.
Hmm.
Now, that seems like something that should change because
Hmm.
as a country, we are always very pro receiving money, forex from NRIs. That's always been a
NRIs.
big mandate for the country. And if NRI capital can go into investing in companies that then helps grow India, I think that's a win-win for everyone. So I think that's one area where we do believe some clarity can emerge.
Hmm.
Second, for example, is TDS
Hmm.
on certain securities is different than other securities. There can probably be an attempt to make that converge
Hmm.
while continuing to meet the objectives of the government. A third example, if I could say, was that um, currently the OBPP regulations do not have a clear framework for marketing. Uh,
Okay.
the, f- the same set of laws that are there for stock broker marketing, equity broking marketing, are applied to fixed income marketing, which don't necessarily have the same relevance, right? Because they're two fundamentally different products. So I
Okay.
think there are some of these um, clarification that are required, but in essence, I think the
Hmm.
regulation is great, and there is no feedback that we have even now have having operated under the framework to provide to the regulator. Yes, I wanted to come to your previous question, which I think we missed, which was the returns on an OBPP platform being lower than on an
Hmm.
unregulated platform. I've been asked this before, so I want to, and a lot of users ask us.
Hmm.
I think it's important to understand that the returns have not reduced because of the compliance costs. I think what
Okay.
everyone thinks is because you are now compliant, you must be having to pay more, and
Hmm.
hence the cost of execution of these transactions is more. That's not the reason.
Okay.
Um, the quality of credit
Hmm.
that is offered on an OBPP platform is different from the quality of credit offered on an unregulated platform in most cases.
Okay.
Yeah. I'll try to explain this with a very simple example. Under an OBPP platform, every product has to be credit rated.
Hmm.
Okay. Now, if you obtain a credit rating which is C, okay,
Hmm.
the alphabet C, it's absolutely junk, high risk. No one would touch it,
Correct.
right? No OBPP platform would put a product with a C rating on its platform.
Correct.
Okay. But an unregulated platform does not need to obtain a credit rating,
Hmm.
right? So a product that is potentially C rated will be available on the platform and obviously have higher returns.
Hmm.
But as an investor, as a retail investor, you do not know it is C, right?
Hmm.
You do not know that that risk is potentially so high, which is why the returns are high.
Hmm.
So the quality of credit on an OBPP is higher because it is rated, right?
Hmm.
Unrated products are not placed on the platform. Exactly what SEBI wanted to solve for. Unregulated platforms are able to showcase any credit because there is no rating. No one actually knows what their risk is, and hence it appears that there is a difference in the returns.
Hmm. Makes sense, Nikhil. I
Yeah,
mean, when I think about it, yes, it does make sense actually. I mean, if they don't have to show the rating, of course, the returns can be higher.
yeah. I
Um,
think the right comparison is to say, let's take the same product,
hmm.
same investment opportunity, and let's compare the returns on two platforms. Right?
Hmm.
Is a difference. That difference is obviously determined not by risk but by many other factors. But that
It's
doesn't
very
that's not the case.
it's very difficult for a retail investor to do that right now, right? There doesn't exist any kind of, let's say, a facility where they can compare two bonds and the risk in those bonds for like, right? It's a
Well, they can, right? Because and somewhere the credit rating solves for that.
hmm. Hmm.
If you have two bonds which are A rated, both have a similar tenure of 12 to 15 months, that is a good grounds for comparison.
Makes sense. Yeah, I mean, I was talking about from unregulated bonds with regulated bonds, but I
Yeah,
guess 1 or 2 years down the line, the whole industry will regulate it, will be more or less regulated. So,
that's right.
well, and you mentioned something about NRIs, right? Letting NRIs invest. So, I mean, given that right now they can't invest in regulated platforms, what's your recommendation for an NRI? And I'm asking this because I'm also an NRI for at least this financial year. And
Okay.
I have to, of course, gravitate towards unregulated platforms to get my, yields. But I, of course, take a calculated decision. But for people who are not so well versed, a lot of people sitting in the Middle East, even in the UK, US, they want to invest aggressively in India. What's your recommendation for them?
Yeah. Well, I would urge people to look at regulated platforms, and if you can't find them in the fixed income space, do look at them in the equity space.
Okay.
There are various, I think there are equity linked or debt linked equity products that you could invest in for a mix of returns.
Like
Or
MLDs.
yeah, or for example, you could still open a bank account and earn a great FD return, at least
Hmm.
at this point of time. So I think those are the things that maybe an NRI should look at. I know
Hmm.
they may not be as attractive as fixed income instruments, but if you are, yes, you are obviously a discerning investor who's done a lot of background, you may
Hmm.
still be able to choose the right unregulated platform to
Yeah, yeah.
invest in, right? But I think in the lack of that knowledge, it's probably better to play safe until
Hmm.
regulations open up.
Makes sense. Okay. Makes sense. So changing gears here a little bit, one of your products, LeaseX, recently there was some, outbreak in the media that, one of the portfolio companies within that LeaseX product, defaulted. And there was a lot of commotion. Oh, Grip has had its first default. I just want to understand from your perspective, how was the investor sentiment, because you're sitting at the top, and how did you think the investors were reacting? How did you handle it? What actually happened?
Sure. Just a factual clarification, that was not in a LeaseX product. Actually, none
Okay,
of our LeaseX products have had any kind of delay in payment. But this was relating to a leasing transaction via our previous LLP structure,
right.
which
Sorry
to a
about that.
company.
Yeah,
But yeah, no, no. So I just wanted to clarify, but your question is
yeah.
still relevant. I think obviously, I think from our perspective as well as from our investors' perspective, incredibly unfortunate to have had this happen. I think more unfortunate was that because promoter of the company, the promoter of the company who the assets were leased to, um, decided to run away. He
Hmm.
actually ran out of the country, and hence completely unsupportive. I think our ability to effect recovery of assets or recovery of value became more challenging.
Correct.
Um, I think if in a situation where that not had happened, we would probably have been able to do much better job of recovering value for our investors.
Hmm.
I think the uh, one of the things that we've always wanted to do, and which I think is played out here as well, is have a lot of transparency.
Hmm.
So if you see, our platform has always given a default rate number. We
Hmm.
updated that default rate number when we had our first default with this company called BigSpoon, and fortunately, that's the only default we have till now. We've also operated with incredible transparency with our users.
Hmm.
Um, while using to use this BigSpoon example, while there were many other institutional investors and platforms, the fact that this happened was first actually revealed by Grip, right?
Hmm.
And the fact that this was even happening was something that Grip brought to the notice of the company's board. So I think
Yes.
I think that transparency has been something that has always been critical at Grip. We've talked about risks, we've talked about the potential of loss of capital very openly with investors, and I think
Hmm.
somewhere that was appreciated. I think the most consistent feedback that we got from our users was to say, we want you to do everything possible
Hmm.
to recover value, right? We understand it may or may not happen. We get that, right? Because there is legal recourse, and those things will have time to play. But our expectation is that as a platform that facilitated or offered us this opportunity, we also would like you to act collectively in our interest to recover as much as possible.
Hmm.
I think that is the most important mandate that is expected, and a very, very fair expectation, which is why we have, taken the action of filing lawsuits, recovering money from the assets, constantly being in touch with other debt lenders, their equity investors, to make sure that all potential recourses are touched upon, and we do as much as possible for our users.
Mhm. So all this legal challenge that you have to do right now, GRIP does it based on its own cost, right? GRIP has to bear all that cost on behalf of the investors. They don't charge the investors.
That's correct. It's all borne by us. This is really what, when we take our fees from a transaction,
Yeah.
we assume that some part of it may be spent towards certain things,
Hmm.
or certain transactions where this happens, and this cost is borne by us. Any
Hmm.
value that is recovered is passed on to the investor completely.
Okay. And did any of your, let's say, underlying processes change at GRIP in terms of originating these kind of deals or, pooling them together to create an SDI?
As a result of this,
Yes, as a result of the default.
I would say that, over 3 years, our processes have changed quite significantly.
Hmm.
I wouldn't necessarily attribute that change to this event, which
Okay.
actually is much more recent in our life. It's happened in the last 3 or 4 months. But we've definitely had lots of changes in our process, lots of learnings. Yeah, still till today, we have completed about 350 transactions, leasing transactions, right? So there is
Hmm.
a lot of experience that we have gained that have helped us sharpen our credit process, documentation, structuring of transactions. So I would say that, people coming into the platform today are benefiting from all of those learnings.
Hmm.
Uh, what has also happened is, and this is somewhere not related to our learnings, but really related to opportunity.
Hmm.
If I was to go back to 2020 when we started Grip, our first deal was a total deal size of 25 lakh rupees. Yeah, yeah, it was, and you know, we it was a first deal, so we also took us a month to get 25 lakh rupees financed.
Yeah, yeah.
But I think people should understand that the kind of company that would entertain an unregulated platform offering 25 lakh rupees as investment is
Hmm.
also likely to be an early stage company.
Hmm.
Yeah. Today, an average deal size on Grip is 10 crore rupees. Yeah.
Oh my God.
So the kind of companies who we are able to knock on doors of and say, hey, we want to create an investment opportunity with you. We want our
Hmm.
users to be able to invest or lease assets to your company is fundamentally different. Okay.
Hmm.
And we have gone through the curve of going from very early stage companies, very small early stage companies, to publicly listed large companies who
Hmm.
are looking to now partner with Grip to take capital.
Hmm.
What this has meant is that we have changed our processes, documentation, obviously, to be able to now deal with this scale. But the returns have reduced for sure, right? Your risk has
Hmm.
reduced, but the risk to reward ratio has still remained very attractive. Yeah.
Hmm.
And I think that's something that people will need to get adjusted to. We are very excited to have made this journey, right?
Hmm.
Because, and you'll appreciate how much ever returns you get at the end of the risk spectrum, you always have a chance of losing capital.
Hmm.
I think at this end, maybe the returns are 12%, 13%, but the chance of default or loss of capital are very small, and hence the risk reward is very attractive.
Hmm. Makes sense. So, I mean,
Yeah.
talking about this right now, what do you fear the most in the alternative investment ecosystem right now? Like, do you ever think, oh, all of this can be taken away at a moment's notice? Will we lose all the investors' trust? What do you think is like the black swan event of alternative investments, if I'm putting that, in
Yeah.
a good way?
I used to worry about this a lot,
Hmm.
till recently. I would say till we got our OBPP license. Okay.
Okay.
Until we did the integration with the NSE. Okay.
Hmm.
But you know, industries and financial products will see their ups and downs.
Hmm.
The people who will survive and the people who will continue to gain more trust are platforms that are regulated
Hmm.
and who are playing by the letter of the law. in offering the right KYC, the right payments flow, all of those things, right? I think that what I fear today, I fear the same thing, but I think the impact to grip may be lesser. So what I
Okay.
fear is that there are maybe 20, 25 alternative investment platforms.
Hmm.
Some of the practices, the products they offer, the structures they offer do scare me.
Hmm.
And if some of them go wrong, really wrong,
Hmm.
I think there could be an erosion of trust,
Hmm.
loss of capital for investors. I think until we were regulated, I could see that really impacting our business.
Hmm.
Okay, because people would paint everyone in the same light.
Correct.
But I think that today, when that happens, we may see some sort of dip, but investors will graduate towards platforms who are doing it the regulated manner.
Hmm.
And I think that to me gives me some comfort of saying, hey, we need to build buffers for dealing with the situation, but we'll
Hmm.
still be okay in the long run because we're doing it the right way. Right?
Hmm.
So I think even concerns that you have highlighted recently around P2P
Hmm.
are things that may impact investor thinking, but they'll
Hmm.
ultimately come back and say, okay, who's the platform that didn't do this, right? Or
Correct.
who's the platform that did not take these risks in the P2P space or outside, and they will then move towards them, because the reality is people will always want to make more returns from their money, right?
Hmm.
They'll just want to find a better way to do it.
Makes sense. Yeah, makes sense, Nikhil. So coming back to, let's say, Grip Invest as, OBPP platform, of course, you're offering now listed, rated, and regulated products. Before you got your OBPP license, you were also dabbling in commercial real estate and AIF transactions, right? When I see right now on the website, it says, because of our OBPP license, we can't offer this right now. So what's happening in that area? Do you still plan to offer CRE and AIF as a product, or how is this going
Yeah.
to work with the OBPP license?
Yeah, no, we're very keen to offer it. We talked about OBPP earlier, but
Hmm.
one of the I think the interesting things that SEBI has allowed is that if you are an OBPP platform,
Hmm.
you must offer listed rated products through your licensed website,
Correct.
but you can create a sister website
Okay.
to offer other products as long as they are SEBI approved or RBI approved products.
Okay.
Okay. Now, the CRE and startup equity that we used to offer was through a SEBI approved structure.
Okay.
And hence, we are going to relaunch those products,
Okay.
but under a sister website.
Okay.
Okay. So it is very much permitted within our OBPP license, because
Hmm.
we never offered non-SEBI regulated structures for CRE and startup equity. And we will be offering it through a sister platform under owned and operated by Grip Invest as
Okay.
allowed by license.
And if I'm not wrong, in the license, can you let's say link your sister website on your main website, like within Grip Invest? I think there are some
Exactly.
rules around that. Okay.
There are some rules around it, but yes, you can link it as long as you follow the rules.
Okay. Got it. And Nikhil, I saw recently on LinkedIn, I think some communications was also sent out to all investors related to Electrifi mobility. And I see you have, added yourself as director at Electrifi. So how is it, what's Electrifi mobility and what does it have to do with Grip Invest?
Um, I'll apologize in advance for the long story and the long explanation. But again, this is a frequently asked question by a user, and want to provide as much clarity. For people who know Grip, one
Yeah.
of our biggest sectors for leasing, for creating lease opportunities, has been electric vehicles. Okay.
Hmm.
I personally come from a mobility background, and
Hmm.
hence natural for us to lease vehicles in the EV space.
Hmm.
Uh, Over the last 3 years, Grip, through its users, ended up becoming the largest lessor of electric vehicles in the country. Okay.
Oh, wow.
And as we got a chance to see the market evolve, we realized that there is a potential risk and there is a potential opportunity. Okay.
Hmm.
The risk is, how do you manage these assets when the lease term is over?
Okay.
Okay. And the opportunity is, if you do a great job of managing them, there could be very interesting monetization opportunities.
Hmm.
So, because it was such a large part of GRIP, we decided to create those capabilities for
Hmm.
asset management so that we could benefit our investors while continuing to offer them very attractive investment opportunities.
Hmm.
And hence, Electrifi was created as a subsidiary of GRIP to
Okay.
manage those assets, lease vehicles, manage assets, and create investment opportunities.
Hmm.
Uh, we partnered with an incredibly experienced operator. His name is
Hmm.
Kunal Mundra. Kunal,
Okay.
till very recently, was CEO of Cars 24.
Okay.
Uh, Prior to that, he was at BCG and Bain, and also set up a tire manufacturing unit for Seat tires. Right, so
Okay.
very experienced in the automotive industry. And Kunal has come in as a co-founder of Electrifi to
Hmm.
help build these capabilities on the EV space.
Hmm. Very interesting. So it's more like a EV fleet management uh, company, which will also source better opportunities for Grip Invest
Yeah,
users.
absolutely. So sourcing, um, uh, managing the risk, and then converting these into investment opportunities onto GRIP.
Got it. Sounds interesting. I mean, let's see how you get on with it. I mean, it's early
Yeah,
days, right? So,
it's early days. We did our first transaction through this partnership was done recently. We leased 76 cars to Blue Smart, Tata
oh,
Tigor
the
vehicle.
bond. Okay.
The
The
April,
46 months bond that came up on the platform.
yeah, that's right. So that was enabled through through this partnership with Electrifi.
Oh,
So
interesting.
it's already got started, and looking forward to do lots more together.
So, Nikhil, I think I saw a new product around 3, 4 months back called LoanX as well. And, talking to a couple of investors, we have seen that they do that comparison of LoanX with P2P lending. Do you think they are both same things? Because kind of both are regulated products, P2P also via the NBFC P2P license, LoanX because it's an SDI listed regulated. So, what do you think about
Yeah. Yeah, I think LoanX is probably the most interesting addition to our product portfolio
that? Hmm.
since we did leasing, right? I think we've done a bunch of products, but LoanX is something that I'm really excited about. I think the comparison to P2P is fair because at the end of the product of both products are retail borrowers.
Hmm.
As you correctly mentioned, both of them are regulated. I think the key difference in my view is two, actually three. Number one, who is sourcing the loans?
Hmm.
In the case of P2P, it is the P2P platform.
Hmm.
In the case of LoanX, it is a decade or 15-year-old NBFC, okay,
Okay.
which has far more experience in loan sourcing. Right?
Hmm.
I think the second is, what is the security provided in the instrument?
Hmm.
In the P2P structure, there is no security.
Correct.
But in the LoanX product, we have a security ranging from 20% to 45% of the investment amount. Right?
Hmm.
So, in addition to coverage on the loans, you have this additional collateral,
Cash
which is not a
collateral.
it's cash over collateralization, bunch of things together,
Yeah, yeah,
but
fair enough.
that really supports the product.
Hmm.
I think the third one is P2P is not rated, is not a credit rated
Hmm.
product. So once again, you're not sure of what is the quality that you're getting into, while as LoanX is a credit rated product, right?
Hmm.
And hence you can truly understand, this is a bond at A, this is a LoanX at A. What does it means in terms of returns versus risk, and what am I getting for my risk that I'm taking, right? So I think
Hmm.
there are three reasons why LoanX, in our view, stands out as compared to P2P. Um, I think different platforms have it different way and offer different advantages, but that to me is where the comparison lies.
So for the LoanX product, what's the average yield on your platform right now? And what's the average tenure that you have originated?
The average tenure currently is between 10 months to 18 months,
Right.
right? And returns are between 12 to 14%.
Okay, so not bad. Not that. I mean, it's kind of benchmarked against the P2P as well. I mean, P2P also try and give you 12, up to 12, up to 13, something like that. Oh.
Absolutely. So the returns are similar, maybe in some cases marginally higher.
Hmm.
But the more interesting thing is the originator quality, the
Hmm.
security package, and the clear demarcation of risk.
Got it. Great, Nikhil. So I think so we have covered a lot in terms of Grip Invest about you
Yeah.
as well. So knowing what we know of all the regulated platforms out there, and specifically only talking about regulated because unregulated is not a fair comparison. Why should people choose Grip Invest in the regulated space?
Yeah. Um, I'll just say one reason. Um, I think it's because of the products that we offer. Okay.
Okay.
I don't think I think the products that Grip has today are very, very unique in
Hmm.
terms of the risk reward, in terms of the structure that they offer.
Hmm.
LeaseX or Grip is the only platform offering LeaseX, right?
Hmm.
Other platforms may, well, other unregulated platforms may claim to offer leasing, but it's very different from a security perspective.
Hmm.
It's very different from a cash flow perspective. So if you're looking to do a investment in a physical asset-backed asset, right,
Hmm.
through a leasing structure, Grip is the only platform offering LeaseX.
Hmm.
Similarly, and we just spoke about Yash about LoanX,
Hmm.
Grip is the only platform offering LoanX, right?
Got it.
I think there are a number of OBPP platforms offering corporate bonds, and you will find the same corporate bonds on every platform. What we are trying to do differently at Grip, and which we believe should be a helpful feature to the users, is create these different products, which
Hmm.
will give much better risk rewards than otherwise.
Got it. Okay. And last question, Nikhil, before I let you go.
Yeah.
You are part of our WhatsApp community, and I ran a poll on the community where how much percentage of wealth people invest in alternatives. You surprisingly, not surprisingly, but you mentioned more than 30% of your wealth is in alternatives right now. So, I mean, can you give us, sneak peek into how is that structured? What do you primarily invest in? And how these investors can also think about their own investment portfolios in terms of allocation percentage.
Yeah, sure. Before I answer, requirement for disclosures, this is, my preference of investing. It's based on my
Yeah,
age, my income, my, other obligations. So that disclaimer needs to be there.
yeah,
My portfolio allocation to alternatives is very, very high,
yeah.
much more than 30%. But you know, a lot of it obviously is Grip, products
Okay,
in Grip. I make it a philosophy as a team actually to invest in every product that we have on the platform. I think that's the right thing to
okay.
do. And I also do it because I think the risk reward, no biases, right? Genuinely speaking, if I was about it, I think some of our products have just incredible risk rewards.
Hmm.
Um, and I think I have seen my portfolio do better because of
Hmm.
investing in some of these products, especially since the time that we've been able to offer it under the STI framework and all the regulation comfort. Um, I do invest very actively in startup equity.
Okay, got
Um,
it.
I feel that I can understand startup equity far better than public markets,
Okay.
um, because I think it's just something that I've been in for so long.
Hmm.
And I get a chance to interact with a lot of founders very closely, understand their businesses, spend time with them, which gives me more deeper insights than is generally available. So I think those are the two reasons why, and those are two areas where I have an allocation in alternatives. So fixed
Hmm.
income on Grip and startup equity investing. Other than that, uh, like all investors, and I think everyone should have an allocation to fixed deposits. I have an allocation to Indian stock market, the US stock market.
Hmm.
Um, yeah, so that's how the
So no
portfolio.
unregulated platform exposure, Nikhil.
No unregulated platform exposure at all. Um, uh, you know, it may sound biased because it's coming from me,
Yeah,
but my point of view is that if I can get very similar returns, right,
yeah.
definitely a better risk reward
Uh-huh.
on a regulated platform, why choose an unregulated platform?
Mm.
I can understand the need to choose unregulated, and to be honest, we did offer unregulated products, right, at a point of
Mm.
time. But that time, that was the only option available. But when that option has been fixed by the regulator, and ticket size is not a problem. You can invest in 1,000 rupees.
Mm.
You can invest in SD at 75,000 rupees. Why should I take the risk of the unregulated platform? That's the
Mm.
piece. It's a very easy. Once you look at it from that perspective, it was very easy for me to say I'm okay to sacrifice 50 bips or 100 bips, but I'm
Mm.
I'm more secure about where I'm investing.
Mm-hmm. So let's say for a normal person who is having their first paycheck, do you think they should also invest in alternatives or in your regulated products, or should they first get the basics right with terms of traditional instruments like equity mutual funds or SIPs, all that sort of
100% get your basics right. Right.
thing? Okay.
Fixed deposits, SIPs, insurance.
Hmm.
And once you've built up a place where you have a safety nest,
Hmm.
and you've got your next salary coming in, take some part of it and make a small investment in an alternative investment platform. See how it plays out for 2 or 3 months. If you
Correct.
like the level of transparency, you like the documentation, etc., etc., go on to make more investments. But that's
Hmm.
my standard advice for anyone beginning to invest here.
Hmm. Okay, that's it. Thank you so much, Nikhil, for sharing your thoughts. And for our viewers who would like to learn, let's say, more about OBPP platforms, we have published a video as well as a detailed article on our blog, which is available at thealtinvestor.in. I'll also mention it in our description. And if you have any questions for Nikhil, either join our WhatsApp community where you can ask these questions, or mention in the comments below. We'll surely pick them up, pass on to Nikhil, and get them answered. If you like this session, please like, share, and subscribe so that it can reach more people and people can make better decisions. Thanks again, and we'll see you in the next one. Thank you.
Thanks. Okay. Thanks, Yash, again for hosting me. I hope the session was helpful. And once again, thank you for doing this great job of creating more education around alternative investments. Love to see how else we can partner to create transparent, independent viewership and education around the space.
Thank you so much, Nikhil. Thank you.
All right. Thanks, Yash.